PayPal stock crash wipes out over $200 billion in market value after company lowers profit outlook. On February 1st, 2022, after the closing bell, John Rainey, PayPal's CFO, forecasted that due to some hurdles and challenges, investors should be cautious due to the short-term future of the PayPal. Such a type of announcement usually results in the 5 to 7% decline of stocks, but PayPal stocks declined to about 18% after this. Traders started to think that the next day will be good for PayPal in terms of trading. But on the very next day, unfortunately, on February 2nd, the losses summed up and PayPal faced the worst trading day ever. PayPal continued to face a decline in stocks of about 30%. This shocking decline would be considered as a bear market, and the sell-off is more than 20%. But this is just about one of the recent losses of PayPal. But if we talk about them from the end of July, then stock has crashed up to 60%, which is about a $200 billion loss in the market cap. So, why is this happening to PayPal? For 2020 and 2021, PayPal was one of the investors' favorites. Why is it facing a mini depression? Let's talk about what happened to PayPal, and that is exactly the story behind all of this. One of the causes of this downfall is that PayPal itself was never able to achieve a sustainable operation. Just like many other startups, PayPal also had a very difficult time in earning profit in its early days. But as millions of customers have joined PayPal, they focused on customers more than profit. Source funding was really easy in the growing fintech company in the 1990s. But in 2001, PayPal realized that if they wanted to survive, they had to be concerned about profitability. But Elon Musk, the CEO, was distracted at the moment. Musk wanted to grow PayPal into a comprehensive financial platform and convert the servers from Linux to Microsoft. It was a great idea, but many executives started to think that Elon was forgetting that they had to earn the profit. That was their main priority. It was the time when Elon was on vacation. Executives found it an opportunity and thought that they would fire Elon and let Peter Thiel take over the company. The company was thinking right and their focus was in the right direction, but they had a long way to go. At that time, eBay, which is a multinational e-commerce corporation, announced that they would partner with Wells Fargo to launch their own in-house payment system called BillPoint. As 60% of PayPal's revenue came from eBay, this was not good news at all. PayPal was extremely dependent on eBay, and this was the sole reason for Yahoo and Google to do a partnership with PayPal. The only company that acquired PayPal at the time was eBay. They had a really threatening offer for PayPal. They offered $200 million at first, and then said that, "We are going to make this offer once and then crush you. You should really take this offer." Now considering this, Peter decided to throw a Hail Mary and take PayPal public in February 2022. Just a few years back, it would be easy money, but this was at the peak of the dot-com crash, making investors really conservative. However, IPO valued PayPal at $1.2 billion, which showed how predatory eBay's offer was. eBay realized that they had lost the bidding war, and at the same time they didn't want to lose PayPal. After that, they offered $1.5 billion to PayPal. Due to the poor situation of the company, Peter decided to sell off the company. Peter saved the company from the predatory offer, but did not save it from the dependency issues. eBay had taken over PayPal, and it would continue over the next decade. Although eBay had taken over PayPal, but for a short time they provided to be beneficial for them. They have resolved the issues of profitability and balanced their losses. Now PayPal and eBay were not competitors, and there was no threat of eBay leaving or dropping PayPal. Now PayPal could focus on their growth again, but their potential was limited. To understand this limited potential, let me tell you an example of the explosive rise of Venmo. It wasn't founded until 2009, but they dominated the peer-to-peer market. Venmo is so popular that it became like a verb, like Google. Another great example is Square. It was a simple financial services company founded in 2009. But they are worth $600 billion now. You might be thinking that PayPal could easily crush them, but under eBay, it was not possible for them due to dependency. But it never means that PayPal was doing bad. They were growing really fast. In 2011, they had about 100 million active users. So, PayPal's stagnation was due to a lack of expansion and not due to lack of growth in their own niche. Expansion services could expand their business more, but as they were under eBay, their golden chains were stuck. But if you were thinking that eBay was having great advantage keeping PayPal under them, then you were wrong. It was not very beneficial for eBay to keep it under them. There was no synergy between these two companies. No doubt, eBay had control over the payment systems of PayPal, but in return, they had to support PayPal in their non-eBay endeavors. It was 2013 when PayPal realized that they were losing their peer-to-peer market, so they acquired Venmo and Braintree for $800 million. It was really beneficial for PayPal, but the bill had to be paid by eBay. For the two companies to work with each other, they have to share resources more and minimize the loss. It can be understood by the example of Facebook. They already had a lot of app developers and social media experts, so they easily made Instagram successful by sharing their resources. But eBay and PayPal do not have the same case. eBay does not have the financial analyst and credit card specialist. eBay realized that it would be a burden to acquire more companies with different niches. So, as the time passed, both of the companies thought that it would be better to part ways. In 2014, eBay announced that it will spin off PayPal into a separate business. Their plan was to take the company on NASDAQ, and eBay investors would get 1 share of PayPal for every share of eBay they own. They further announced that they will work with PayPal until 2020 and will switch to Adyen for payment processes, but still keep supporting PayPal until 2023. So this time, it was really easy for PayPal to grow their business outside of eBay as compared to the situation in the 2000s. PayPal is now a trusted brand, and they have now grown online merchants. They have earned enough profits too. Now they don't have to worry about profits, and it is increasing day by day. With their profits, they acquired more companies. In 2016, they acquired about 12 companies, and the most famous among them are iZettle and Honey. It wasn't easy at all. When eBay and PayPal parted ways, their draft of their terms of services leaked. One of its portions caught people's attention. It said that PayPal has the right to robocall and auto text messages their customers. Customers were really angry knowing about this, as they didn't like this portion of TOS. So many of the users closed their account. PayPal had to pay just $25 million fine due to bad business practices. Now, before they could focus on IPO, PR was their nightmare. PayPal worked on these issues really well, and their income increased from $1 billion to $2 billion in a couple of years. But the real growth of PayPal couldn't be noticed before the pandemic of 2020. As the world shifted from physical to online mode, everyone prioritized online shopping. So, PayPal grew a lot and it escalated a lot. As soon as the pandemic happened in 2020, investors started to invest in tech stocks and dump their stocks in hotels, airlines, and other stocks as well. This was one of the explosive growth eras of PayPal in its history. PayPal hit 224% in the next 12 months. It translated into a 760% return on the IPO and an 8.6% return. But PayPal was overvalued by 72%, as it only grew by 5 times at the bottom line compared to the IPO evaluation. Now, the PayPal income was dropping to about $5 billion. Investors also started to think that they have given PayPal a lot of credit and overvalued it. At the start of 2022, PayPal stocks started to drop by 40%. It was always a circumstance that made PayPal face downfall again and again. Despite all these circumstances, one thing that no one could stop in PayPal is its resilience. A lot of investors are still sleeping to invest in PayPal. As it was announced a few months ago that Amazon will start accepting payment from Venmo in 2022. If PayPal also takes just a small share of Amazon, then billions of people will do transactions using it. And PayPal can start a decade of growth after a year or two of stagnation. But that's just a prediction and nothing else. That's all for today, guys. What do you think about the future of PayPal? Are you using it or planning to use it in the future? Tell us in the comments section, and don't forget to subscribe to the channel. See you next time!